Hello traders, this is Rich Derrick. This is the market preview for the coming session. This is going to be for Wednesday, May 5th, 2013. We had a fairly sloppy day that actually wound up in a bit of a recovery as far as price goes on the day, but we were still down nonetheless. But I think the real feature though was that even when the market was trying to push higher, and even when the market was in fact higher on the day, throughout the session we really had negative market internals. I think that's really the key feature here of the last few sessions. We'll definitely take a look at that very closely. But let's take a look at the charts here real quickly, just to go through what's going on with the majors. So let's first take a look at the ES futures. All right, here's a look at the ES futures. You can see that we had another kind of sloppy day. We did use the 1625 area again, which is now the 4/8 level on the Murray Math box. Very important level. We did reach up intraday, try and push higher, but we got rejected by the 10 EMA and also got kind of pulled down by those negative market internals. So for now, the high of today's session is going to be key resistance for tomorrow, as well as 1656. To the downside, the low from Monday is going to be key 1621, 1621.25, right in that area. If that gives way, there's a couple levels to watch. The first one is going to be this gap right here, about 1606, 1605. Then below that's going to be the rising 50 DMA. Now let's switch over to the Nasdaq futures. Nasdaq futures, kind of a similar day. Right now we're playing out against the 8/8 level though, so that 29.68 level is going to be really important. We did not get down to really retest the lows as much as we did on the broad market side. So a little bit of relative strength intraday in the ES. It kind of unwound a little bit, and it wound up really kind of at the end of the session trading in line on a relative basis versus the broad market. So no real divergence there. One thing I want to point out though is the MACD though has gotten pretty extended to the upside, and we do have this negative cross, so that's definitely working against the chart. The other thing to keep in mind is that we are 12 days up now, and so we're just really one strong candle away from printing a 13 exhaustion warning, which would probably turn this to the downside and put this 50 DMA in play if we can get that. Right now there's definitely there's definitely very little risk of a recycle in place, so we're probably going to get that resistance before we get that 13 in place before we wind up with any kind of a recycle. So it's going to be a big signal if we get it, and when we do, we're definitely going to talk about it. All right, now we talked about the internals before, and here's where it really kind of comes to roost. We're minus 800 or more issues on both sides today. And what that did for the broad market was, in the New York Stock Exchange side of our cumulative advanced decline line, we've now broken the trend line that's been in place all year. This is a big development, and one candle does not, or one tick does not make a break. But if we do get any kind of follow through to the downside, this is going to be very negative overall. You can see the Nasdaq side starting to roll over too. We got up to the midpoint of the regression channel. We're right back down to the lower fringe of that, and if we do turn down here, this is going to wind up being a lower high. See, when the market was pushing up higher here and had all of that well organized trading, it was kind of riding the upper band. We had this one mini correction, and then we kind of drove back up here, but we couldn't even get back to that level they were at before, and we're really starting to lose and level off speed. Now look at the overall chart here on the Nasdaq side. You can see we've got a couple of lower highs in place, and now we're potentially putting in a lower low, which would qualify those lower highs. So this is a big development and is definitely bearish. If this follows through to the downside, this will terminate this run to the upside, and we're going to be looking aggressively at the short side of the market. Another thing you want to keep in mind for risk on and risk off, the Dow Gold ratio had an extremely bullish run to the upside here. You can see how we leveled off here, and gold was just kind of nowhere, and then really started rotating aggressively out of the gold asset into actual equities in the market, and it took the Dow Gold ratio went up very aggressively here. But now we've started to peak. We're starting to roll back down here. We're caught a little bit of a bump here at the midpoint of the regression channel, but this looks definitely worrisome and very extended short term here for the equity bulls. If we start to see a pullback with equities and we start to see some money going into safe havens, perhaps gold, we're definitely going to see this ratio start to drop, and it could drop pretty aggressively. The thing to watch is going to be a break of the lower regression line. If we do that, that would be confirmation on top of the cumulative advanced decline line rolling over that we're now in more of a negative tape. One more risk on, risk off measure to take a look at is the S&P TLT cross. This is the ratio of the S&P divided by the TLT. So when this ratio in this chart is on the rise, that means the S&P, or equities if you will, are in favor over the safety of bonds. If we start to see this start to roll to the downside, that means we're starting to take money out of the S&P and starting to bid up bonds. We had this mini break here earlier. We were able to recover that and get back up into the trend channel, but we've not even gotten near the upper range of the trend just yet, and are threatening to break down below the this regression channel in the ratio. If we do break the lower boundary here of this channel, this is going to put this 1360 area in play, and probably do it fairly quickly. So definitely keep an eye on this as far as your risk on, risk off measurement. All right, so here's a look at the XAU versus all the other risk on type assets. The big ones are the SOX, the BTK, and the BKX. They're all fairly weak today except for the SOX. The SOX did have a little bit of relative strength, but the BTK got hit really hard today. You can see how fast that's starting to drop. The banks, that's the green line here, also rolled to the downside. So what we can see here is a bit of a convergence. You can see how these are going opposite directions. People taking money out of those more risk-averse asset classes. In this case, represented by the XAU. This could easily come in quite a bit further before it even gets remotely extended. So this hasn't even happened yet. And also note here in the XAU, we've got this key area of resistance. If we pivot up above this, this will make this a double bottom and a channel breakout to the upside here. And don't forget, this has had a very, very extended decline, so there's plenty of room for upside there. All right, the top sector on the day was the SOX. Getting fairly deep in the count. We're getting close to about 3 days away from the exhaustion signal. We are in the overbought territory on the GAN box. So while construction is positive and still holding up here, we're starting to see some signs of fatigue. We're a good distance today from the close off of the high, so we're starting to see some fatigue here. We've got key resistance at 484.38, which is that plus 2 ace level. This 8 ace level, which is the blue line here on the Murray Math box, 468 3/4 is going to be a draw, and is definitely pulling on it. To the downside, if we break below that, this breakaway gap right here, the low from that window, 462 and like 80 cents, is going to be key support. It could come into play tomorrow. The other thing I want to talk about that we don't often look at is the drug index, the DRG. We've had a pretty solid run to the upside here, but we did get our secret exhaustion warning here, pretty much at the hot push of this move. We've had a couple other days where they try to get up here, but we've got big tails up there and 2 negative closes. By negative closes, I mean we closed below the opening. So these are all distribution days here. Starting to feel the effects of that to the downside. We're still kind of gaming this prior support area, which was this low water mark just below the 6 ace level. But if we lose about 420 3/4, we could easily see this 4 ace level at 406 1/4 put into play. All right, finally, the last chart I want to take a look at here is the banking. The biotech index, the BTK. BTK has had this pretty strong move to the upside. As everybody knows, it's very protracted and it was really pretty well organized. We did see this acceleration. These 3 big white candles here. We got up into the overbought area on the Murray Math box. Now we're coming down to start to game this 50 DMA. Now remember, when a chart comes down to interact with a major moving average, in this case it's the 50, for the first time, it's usually kind of touched and gamed a little bit before it gives way. So this doesn't mean necessarily that this can't break down and is only going to find support and again pivot higher. Just be on guard for this, be ready for this. This is very typical of the first interaction after you've been stretched out above the 50 DMA. Usually it doesn't take more than a day or two to kind of tell you what it's going to do when it interacts with the 50. When you get down to the 200 daily moving average, that's a bigger level that more people look at. When you get down to that, the gaming can be more protracted, and sometimes it can even take a week. But definitely be aware of that. The 50 DMA right now is really critical support and is really defining this trend to the upside. If we lose this, I think a lot of technicians will start to get more bearish on the sector, and I think you'll probably see some possible downgrades and maybe some price targets getting rejiggered, so we could see some profit taking in this sector. So be sure to have some shorts ready to go in this sector if we do start to roll to the downside. Well, as always, thanks for listening. And this has been Rich for Tradesight. Good trading.